So welcome back to day 4, and if you don't understand what a pip is, you don't understand what your results. You might see numbers moving up and down, you might see profit and loss flashing, but without understanding what pips are, you're basically watching a scoreboard without knowing how points are counted. So in this video, I'm going to explain what a pip really is, why it matters, and why serious traders need to think about pips, not just the money. And let's remove intimidation now. So a pip is basically a simple unit of measurement. That's it. That's how we measure movement in the Forex market. Just like a mile measures distance, kilogram measures weight, seconds measure time. Pip measures price movement. So when price moves, it moves in pips. Nothing mystical, nothing complicated. It's just a way to standardize movement across currency pairs. But who am I and why should we watch this series? So my name's Callum West. I am funded with, I've passed multiple 1 and 2 stage verifications. I'm funded with a couple of prop firms, and I'm also part of a trading community that has over 3,600 members, and also have a Forex trading bot. So if you are interested in copying the signals, the exact signals I've used to grow my account with, or if you want to get involved with the Forex bot, then feel free to drop me a message and we can get you set up with that within no time at all. So let's use Euro USD as an example again. So as you can see on the screen right in front of you, this is basically called Trading View. So this is where we mark out all the charts, measure everything, and use this for our analysis within the charts. Now, I will do a full explanation of this, but for the time being, like I say, it's just going to be about pips on this one. So just to get straight into it, so as you can see right now, this is euro to the US dollar, and currently it's set at 1.15715. Now in Trading View, there is actually a handy tool. It's just this little measuring stick right there, and quite simply you can click on where it is, and you can either move it down or you can move it up, and this will basically tell you the amount of pips just on there. So as you can see what I've just done there, so I'll put it where it is right now, so 1.5699. Moved it up 10 pips, stop it right there, and as you can see it is 15798, so that is just 10 pips, obviously 9.9, 10 pips obviously there, and then you can also do it to the downside as well. So currently we're set at 1.5740, 10 pips down, 1.5630. So like I say, it is just a unit of measure, so it's not telling you basically how much money you've earned, how much money you've lost, because obviously depending on lot sizes you are going to be earning or losing different amounts on that. But like I said, a pip is just a unit of measurement. So if we were just to take a random candle, for example, so let's just go with this one right here. So this candle alone, open and closed within 10 pips, roughly, well, 9 pips. So but like I say, it's just a unit of measure on the charts, just to make it nice and simple. Like I say, your pip doesn't determine how much money you've made, how much money you've lost. Well, it does in some aspect, but it just also depends on your lot sizes, your account size and everything like that. So here's something important to remember. So traders do not obsess over how much money they make per trade. They think in terms of pips and risk to reward ratio. So this is because basically pips are neutral. Money triggers emotion, so if you are focusing purely on emotion, obviously when you win you feel excited, if you lose you feel anxious. But if you focus purely on pips, you analyze each movement, you evaluate the structure, you measure the consistency within the trade. Trading becomes more mathematical instead of emotional trading. Now, here's where beginners mix things up. Pip measure movement. Lot sizes determine how much money you get from that movement. This means you can have a 20 pip move and make very little, or you can have a 20 pip move and make a lot of money. It depends purely on your position size. This is why we separate movement, pips, from exposure, lot size. Understanding this separation is crucial, because if you think small pip move, small opportunity, it's not necessarily true. It's about the risk management, not excitement within that trade. As you can see with this one right here, we have had, well, this blue candle right there, it was a massive 21 pips, whereas obviously the most recent one, the one before that one, was only a 2.5 pip movement. So like I said, just purely if you go on monetary value rather than pip value, you are going to have a lot more emotion within trading. Now, beginners often chase these big movements. They want 100 pips, 200 pip, huge swings, but consistent traders understand something deeper. Small, repeatable moves compound over time. If you are consistently capturing small, structured moves with proper risk management, you build stability. Forex is not about one giant trade. It's about dozens of disciplined movements each time. Pips teach you patience, whereas if you are chasing the money, it teaches you greed. Here are the mistakes beginners make with pips. So thinking more pips always equals more money, ignoring risk per pip, over leveraging to maximize small moves, comparing pip counts with without context. So you could win 50 pips and lose 20 pips and still be in your negative if your risk to reward ratio is off. Pips alone don't determine success, but pips plus risk management determine success. So this was day 4 of my 90-day Forex beginner roadmap. Now that you understand movement, tomorrow we'll talk about things that turn movement into real risks. So lot sizes. This is where most beginners blow accounts, so they risk too much per trade, trying to get that big win straight away. But if you are interested in, like I said, joining the trading community, well, yesterday alone we was in profit of 4,700 pips, or the auto forex trading, which we was up by roughly about 1.8% yesterday, then feel free to drop me a message and we can get you set straight up. But yeah, if you could also subscribe and comment on this video, it would be greatly appreciated.